So how do you explain then this? Silver shooting up.
It's transactions between buyers and sellers,
Right.
and supply and demand, not the futures contracts.
Not the contract. So there's a disconnect.
A serious disconnect.
Is it time to show the round?
I suppose.
I'm getting really excited to do this.
People are beginning to wake up to the fact that the hedge fund price of gold is not very accurate. And that was the discussion. And I say, well, it's not a hedge fund price. It says right there it's a spot price. And so we researched the spot price, and
Right.
it's very interesting. I had it here on my phone. If you
Okay.
like to read what the spot price is.
Ooh.
And remember, I've been saying it depends on two things: transactions between individuals and the oldest economic concept,
Supply and demand.
Yeah.
Right? All right. It says right here, this is AI, though, saying this. Do I trust AI?
No.
Okay. Let me just read this. The spot price is the current market price for a commodity, currency, or security that is available for immediate payment and delivery. This real-time price is determined by the forces of supply and demand in major financial markets, reflecting the immediate valuation of an asset by buyers and sellers, and can fluctuate constantly based on various economic, geopolitical, and market factors.
Yeah, they had to put that caveat in there for the hedge funds. There are two things: it's transactions between buyers and sellers,
Right.
and supply and demand, not the futures contracts.
Not the contract. So there's a disconnect.
A serious disconnect, because there is a regulatory authority. It's called the Commodities and Futures Trading Commission,
Right.
and they're not doing their job.
So how do you explain then this? Silver, just in the last week, shooting up close to $39.
It softened. It went all the way down to 37 and change, and I think that's Jerome Powell's fault.
You mind breaking down Jerome Powell's recent speech at the Jackson Hole conference? Not the whole thing, but like 1 minute of it with me.
Yeah, let's take a look at that 1 minute, because that's probably the only thing that's important in everything that he said.
All right.
So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation.
Oh, I got to stop right there. He just gave two scenarios.
Yeah.
Inflation, upside, employment, downside.
Yeah.
You know what another word for that is? Stagflation.
Yes, you could call that, or it would be making up something that sounds good.
They're worried about inflation, but they're also worried about a recession it's a inflationary recession.
But what are they
Stagflation.
evaluating for that employment? Is it unemployment figures? Is it salary figures? Is it getting tens of thousands of illegals out of the country so things can get back to normal? What's he talking about?
When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
So he says that twice. Policy stance, policy stance. This is what the markets loved. Well, we may need to adjust our policy stance.
He sounds to me like he's laying the groundwork to put off lowering the rates even farther.
Oh, no, I think it's the opposite.
Well, he's laying the groundwork to accelerate?
Yeah, the Fed
Why
watch.
why hasn't he done it yet?
Well, FedWatch actually has it at a 75% likelihood of a quarter basis point drop in September.
It's right. It's already
75%.
August. Already August. How long have we been waiting for that rate cut?
We've been waiting a long time. And you want to know why he hasn't been doing it? This last few seconds. Listen to this.
Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So,
We will never deviate from this approach. This is a shot over the bow at Trump. Nobody's going to.
Well,
We will always do it that
do you
way.
remember Greenspan when he left?
Yeah.
When he left, what was right before he left, what was the interest rate? And when he left, what was the interest rate?
Off the top of my head, I don't know. Do you? You probably do.
Yeah, I wrote a home equity loan at 2.74% because it had been at around 8%. And then Greenspan decided he's going out on the white horse. So he dropped the rates down to something that nobody had ever seen before, not in modern times. This guy is about as close as Greenspan was to losing his job. And, how long does it take to struggle back from that? I mean, it's not even struggling back very quickly now.
It's giving the markets what they want. They need this stimulus. That's what it is. Market stimulus.
They love to see the rates drop, but they haven't dropped yet.
No.
So it makes sense that the markets would soar when they're dropped. Okay? And
they're anticipating it, though. They're trying to front run.
okay, the other thing the hedge funds did was they are influencing the foreign exchange marketplace. And so what was today's drop or rise in the price of gold? The drop in the dollar.
So $40 an ounce silver, Tim. How likely are we going to see that?
Well, it's
Soon.
It's hovering.
It's getting awfully close. 39. It broke through.
Broke through, but didn't stay there.
Didn't stay there. Yep.
And
think there's
a foreign exchange reason usually evaporates before Monday. Just saying.
You're going to see a big pullback, do you think, on Monday?
I think the pressure is downward.
So that means that the 20 cull and colorized American silver eagles that you were going to gather up for me in a tube will be cheaper.
Well, I'm pricing them at yesterday's market.
Plus you add the Yankee markup.
The Yankee markup.
Is it time to show the round? What do you think?
I suppose.
I'm getting really excited to do this. There it is, guys. The Yankee Tim round. And on the obverse, the face of the channel right there, it says it. Coin Dealer Tim. Look at the detail on that. This was designed over a lot of back and forth with SD Bullion. And Little Stacks had a hand in it, Tim. And it's from which mint?
I heard a rumor that it's one of my favorite places to go and where I used to get everything from, and that's Highland Mint.
Exactly. It is the Highland Mint. You can make out in the bottom corner there, HM. Did you ever think you were going to be on a coin, Tim? Really? Seriously? Look at that.
No, maybe a flip coin.
It is exciting. You guys want to know what the link is? sdbullion.com/Yankee to buy your Yankee Tim round right here. So I've talked to Cole, and I said, I'm sure Tim's going to want to sell. The people are going to come into your shop, Tim, and say, where's the rounds? And you want to be flat-footed on these. So they're going to sell them to you at dealer to dealer, right? So dealer cost, so that you can make a little bit from it. But that's it. That this is going to be available both online for those people who like to be able to get it at your convenience, or you could call Tim or go into his shop. Get yourself a Yankee Stacking round. You do have to sign something, though. Right here. This says license and name usage agreement. I've gone through it, and a lot of it is the regular legalese, but they basically have to get your permission to use your likeness and Coin Dealer Tim.
Is it all right if I use my auto pen?
Oh, Tim.
I have my own coin. I might as well have an auto pen.
An auto pen, right?